Buza Commissioner.
We welcome you again to this program of Buza Commissioner. This week, as I promised you the last time, we are going to continue with the second part of the question of our brother, Mr. Joseph Wasoma from Chileka, who asked the question, what's behind different taxes on one business and how are these taxes calculated? So our focus today is on indirect taxes because last week we dealt with the issue of direct taxes. The next example of a tax that is indirect is excise duty. And excise duty, as I mentioned earlier, is tax paid on a few items. And for the case of Uganda, because it varies from country to country, we pay excise duty on items like cement, items like cooking oil, items like water, soda, beer, wine, spirits, and a few other items along that line. Now, excise duty is either paid as a percentage of the cost of the item, which is called ad valorem, or as a specific amount. A specific amount as in the charge of local excise duty is 50 shillings on per litre of water. That's a fixed amount. Or as a percentage, it is 10%. And the law says 10% of 50 shillings, whichever is higher. So if your water is very cheap, the cost of producing this bottle of water is very cheap, and it happens to fall below 10%, then we'll go with 10%. If it is above 10%, then we will go with, if it is above the 50 shillings per litre, then we'll go with the percentage. So let me give another example of a factory that produces water. And we can say a factory that produces 100,000 bottles of water. And this factory looks through their costs of cleaning this water, packaging it, and they come up with what they call the ex-factory price before you put anything. Ex-factory price of a bottle of water, of one bottle of water, and you put this cost at 650 shillings as an example. For you to compute the excise duty on this water, it will be 10% of the 650 cost of each bottle of the 100,000 bottles being sold, and this will come to 10%. First of all, this is 65 million. 10% of this will be 6.5 million. Forgive me when I do these calculations mentally, it is just in the interest of saving time, but you can double check it. This one is 65 million, 10% of that would be 6.5. So this would be the local excise duty paid on the entire 100,000 bottles of water for sale. But what would be the cost of excise duty on just one bottle? Remember, it is 10% of 650. The actual excise duty on one bottle would be 65. And what would be therefore the cost of the bottle? It would be this 65 plus 650, which would be, okay? So 715 would be the actual cost of a bottle of water with excise duty inclusive. So what does it mean? If I go in a supermarket and I buy this bottle of water at 1,000 shillings, what this means is that the person who bought this water incurred the 650, which was the ex-factory price, added on the 65, which is the local excise duty on this bottle, and of course added on their other costs, which is about 285. And that is how you get to pay 1,000 shillings for this bottle of water. Therefore, the person who has paid the excise duty on this water is not the supermarket which has sold you this bottle at 1,000. It's not the business. It is the man who is going to drink this water. The 1,000 you've paid includes excise duty. It includes 650, the cost of production. It includes the other costs of doing business, as well as the profit of the business selling this. And that's why you now pay 1,000. So, in brief, that is how you know that this tax is paid by the business directly, and therefore it is a direct tax, or it is paid by the final consumer, and therefore it is an indirect tax, which is otherwise known as consumption taxes.
Buza Commissioner.
Now, let's look at a quick example of customs duties. And these are a bit many. Customs taxes. So, first of all, the customs taxes are now determined at a regional level. So they are administered no longer under our own laws as a country. It is under the East African Community laws. And the act that manages this is the East African Customs Management Act, IACMA. Now, under the East African Customs Management Act, because of the policy of import substitution, there is 0% tax paid on imports of raw materials. So anything raw material pays 0% import taxes, because the idea is lower the cost of raw materials, and once they are here, then you're encouraging more manufacturing and value addition to those raw materials. The next category that pays minimal tax, the other category before I leave the 0% is on medical equipment, because the idea also is that you have medical equipment affordable. So medical equipment is also under zero rate. Then the next one is textbooks. Again, make education as affordable for everyone as possible. So the whole region agreed that for those items, there will be zero tax. And a few other things are zero rated. The rest pay some minimal tax. So there are those they call intermediary products. And these are the next level of raw materials. So they've been worked on, but they are not finished products. They are intermediate products. These ones pay 10%. So intermediate products pay 10%. The next category is finished products. Finished products pay 25%. Finished products pay 25%. And then the final and highest import duty is on the finished products, but which we can manufacture, or we're already manufacturing here in the region. And this is to ensure that we also support local manufacturing. We also support local manufacturing. So for the finished products, but which are available within the region, these ones, they pay the highest band, which is 35%.
Buza Kamiso now.
So quickly, let me show what other taxes apply to imports. So we have import duty, which I've just explained. It can vary from 0 to 35. We have excise duty. We have VAT. We have withholding tax, which is income tax paid in advance, and we have infrastructure levy at different rates. So as we look at this example, I will go through the rates. Now, supposing you are dealing in cosmetics. Cosmetics are those that have the highest tax at import duty. Cosmetics fall under the category of finished products that can be manufactured locally, and therefore the applicable import duty is 35%. Cosmetics, import duty here, import duty would be at 35%. Supposing we are bringing in stock of cosmetics worth 10 million shillings. This is the cost price wherever you're buying these perfumes, lotions, and all sorts of cosmetics. If you're buying it at 10 million, the import duty will be 35%, which will be 3.5 million. Okay? The next will be value added, no, excise duty first. Excise duty first, and excise duty will be the 10 million plus the 3.5 import duty and 10% of that. So excise duty, excise duty will be 10%, but 10% of what? 10% of 10 million. This 10 million is normally referred to as the cost of cost, insurance, and freight, CIF, meaning the cost of goods plus the cost of shipment up to here. So the CIF. So CIF plus 3.5, which we've just added on as import duty. Therefore, 10% of these two will be this, and this is 13.5. 10% of that will be 1.35. Okay? Then the next tax to consider here will be VAT. VAT is value added tax. Remember, for someone who is buying these cosmetics for sale, this will be their VAT input. It is input. Meaning they will pay it here at importation, and then they will recover it when they are selling. This will be your VAT input if you are bringing these cosmetics to sell, if you are not the final consumer. And VAT is 18%. 18% of what? Of 13, our base here, plus that now. 13.5, which is this plus this, plus 135. Okay? So 18% of all that together. In the interest of time, I'll just put it there. It is 2.673. I'm jumping some steps here to save our time on air. So that becomes the VAT applicable on this consignment. Then finally, there is withholding tax. We talked about withholding tax. We said it is advance income tax. Advance income tax, because when you're making your final income tax return, you'll take credit of this. And what is this? It's normally 6%, of which base we are using the CIF now. We are not going to add this. For this one, it is 10% of the 10 million, the CIF. Cost, insurance, and flight. So this one would be 600,000. Okay? Then finally, infrastructure levy, which is 1.5%. Infrastructure levy, 1.5% of the CIF again. So this would be 150,000. So all these taxes payable on an import like cosmetic, which pays the highest. When an importer is bringing these products in, they will compute all these taxes and pay them to URA. And they will get the total taxes here paid. This comes to about 8.273. The total of all this is 8.273. Okay? So these are all taxes paid on this item of cosmetics. They will get this, add it on to the CIF, which was 10 million, the cost, the insurance, and flight. So up to that point, these items have cost them 18 million. 18,273,000. Now, they also have additional costs of running the shop, paying the workers, paying the bills, and so on. They add all that together so that what they come up with now helps them establish the cost per product. That is why if you go to China to buy this shirt yourself, you may buy it at less than $2 or maybe $3 or $4 for argument's sake. But if you're going to buy it here in Kampala, you'll most likely buy it 3-4 times what you would have bought it in China. So why? There is the CIF, there are the taxes which I've just explained, and there are the costs of the business, selling that shop, paying for rent where they're going to display it for you to find it. And therefore, if you find this shirt in Kampala, you will not pay the $5 you'd have paid in China. You'll most likely pay $20 for the shirt, or even $50 for the shirt.
Buza Kamiso now. Now you can get direct answers. Send your tax-related questions via WhatsApp or SMS to 0790-141-887, and the Commissioner General of URA, John Musinguzi, will personally address them. Tune in to UBC News Tonight every Monday and Wednesday for expert insights and clear explanations. Buza Commissioner.